Dear students and colleagues, welcome to 2022 of the LUMSA University in Rome. Innovation Talks is a flagship initiative of our university, arrived at 6th edition. It's a cycle of webinars aimed to discuss innovation, technology, sustainability, and the future of business in society with expert and opinion leaders in the business community. Innovation Talks are organized by the Department of Law, Economic, Politics and Modern Languages of our university and the Master's Degree in Management and Finance in partnership with the Association of Alumni LUMSA. I'm Filippo Giordano, Professor of Management in LUMSA and Program Director of the Master's Degree in Management and Finance. In this edition, we will have 6 webinars where we will discuss entrepreneurship, innovation, venture capital, finance, metaverse, impact investing. These 6 webinars will take place every Wednesday, so from today to 6 April, in streaming on our YouTube channel. Today, I want, in this first webinar, to say thanks to all the colleagues of LUMSA University that have organized this edition. And in particular, I want to say thanks Professor Nesci, Professor of Venture Capital in our program, Professor Andrea Jeremica, Professor of Entrepreneurship, Professor Alessandro Cavallo, Professor of Digital Marketing, and Professor Giuseppe Ambrosio, Professor of Business Planning in our university. And of course, I want to say thanks to our head of the department, Professor Claudio Giannotti, and that is Professor of Finance in LUMSA, that also will be the chair of these talks, because today we will discuss and we will have a speech on the topic of sustainable finance. So it's a very hot topic in the business community. So I leave the floor to my colleague and friend, Professor Claudio Giannotti.
Thank you, Filippo. Thank you, Professor Giordano. I'm very happy to be here to stay with you and all the students attending this lecture. I'm the director of the department and I'm teaching FinTech and Innovation and Sustainable Finance in the Master Degree in Innovation, in Management and Finance. So thank you, Filippo. Thank you all the team who worked for these innovation talks. And I do really want to thank Andrea Baranes. And he is the Vice President of Banca, Etica. And he has been a member of the board of directors and of the executive committee of Banca Etica since 2016. He is president of the Ethical Finance Foundation and member of the board of the European Finance Watch Network. This talk is very interesting. Andrea will help us to understand what is a truly sustainable finance. Obviously, all of us are interested in sustainable finance, in having a better world, a sustainable world. But in this moment, it also is very important to understand how to build a really, really sustainable finance world. So, Andrea, thanks a lot for being with us. I am very glad to Banca Etica, for having accepted this invitation, and I leave you the floor. Go ahead. Thanks.
Thank you. Thank you very much, and thanks for the invitation, first of all. As you were saying, I'm currently the Vice President of Banca Etica. So mainly during this lecture, I'm going to try to present our approach to ethical and sustainable finance, and how we see also other initiatives taking places lately in the field of sustainable finance, and notably the process that have been started by the European Union a few years ago in order to define sustainable finance, which has some pros and cons from a point of view. First of all, maybe some few information on Banca Etica itself. It's a bank, first of all. It's a normal bank controlled by the national banking authorities and offering all the services that the other traditional banks do offer, but we have some specific and particular characteristics that are specified only to Banca Etica. We were born more than 20 years ago, and the birth of Banca Etica came out of a bottom-up approach, which is already a first difference, meaning that a lot of people and NGOs and associations and trade unions and other organizations were wondering, could we start a different banking model? And we're starting a reflection on the use of their own money. As Professor Giannotti already briefly said in his introduction, in these days we are all quite astonished by what's happening in Ukraine and the conflict that we're living, the tremendous conflict that we're living. And more than 20 years ago, there were a lot of people that were already thinking, but where is my money going? I'm putting my money in a bank, and then does this bank use my money in my bank account in order to promote business models, operation impacts that are against my values and my ethics? And namely, there were NGOs who were saying, we are deeply committed in trying to help the global south in diminuting, in sharing the wealth and the well-being to the global south. And in the same time, we have our bank accounts in banks that may sell weapons and foster conflicts and wars in the same countries we are trying to help. So can we try to promote a different banking model? And it was really a bottom-up approach in the sense that hundreds and hundreds of people started raising money. As you may know, in order to build a bank, you have to raise a minimum amount of capital. And normally you have several big groups that put a lot of money. The opposite, what happened for Banca Etica is that, as I was saying, a grassroots movement started raising capitals, 50 euros by 50, we had liras at the time, but one share was around 50 euros. So we went around to fair trade shops and NGOs and people saying, hey, we are starting a different banks. Would you give us 50 euros in order to buy one share of what was at the time the cooperative towards Banca Etica? And by the end of the 90s, we raised the minimum amount of capital that was needed in order to start a bank. So we went to Bank of Italy, to the central bank, with seeking all the authorization, and the bank started in 1998. So it was like slightly more than 20 years ago. This model is quite unique. I will come back several times to other European models of ethical and sustainable banks. There are several other linked to specific cultural or historical reason, other models of ethical and sustainable bank. But this bottom-up approach in order to build a bank was quite unique on a European scale. So we started, as I was saying, as a normal bank, offering all the services that normal banks do offer. I have some presentation. I believe Professor Giannotti will put them at disposal for the students who follow this lecture. But maybe I will give just a couple of figures in order to show the results that Banca Etica reached so far. So maybe, I hope, yes, just a couple of figures to show you the dimension of the banks. We currently have slightly more than 100,000 clients and more than 46,000 shareholders, meaning physical persons and organizations, NGO associations, etc. And these are some of our figures on social capitals, how much loans we disbursed. We disbursed more than 1 billion euros loans towards association and NGOs and other people. So these are just a couple of figures. I'll come back to it later on, but just to give you a first flavor of the dimension and the activities of Banca Etica. Some important information. Banca Etica is a cooperative bank, meaning the more than 46,000 shareholders are really owners of the bank, and we work after the principle of one head, one vote. As you know, the normal banks, which are for share companies, the more capital you own, the more you decide. In a cooperative banks, it's one head, one vote in the AGM and in the decision making inside the bank, no matter what is the amount of capitals of shares you do own. So that's the first difference with respect to the, let's say, mainstream traditional banking system. Another huge difference, we are at the moment, I would say, unfortunately, we are at the moment the only Italian bank that provides full transparency on all the loans that has been provided in the history of the bank. As I was saying, Banca Etica was born out of the movement of people who started thinking about the use of their own money, saying, if I put my money in a bank account or I give it to a financial intermediary, then what will happen of this money? Will this money be used by the bank to foster the economy of my territory, or will it end up in some tax havens in the other part of the world? Will it go to organic agriculture and fair trade, or will it go in some weapons deal or fostering wars at the other part of the world? So since its beginning, Banca Etica decided to operate with a full transparency approach, and this is a fundamental criteria from our point of view in order to define what truly sustainable finance should be. If you have nothing to hide, there is nothing to hide. So anyone can go on the website of Banca Etica, and there is a special section named Our Loans, who do we give money to? And anyone can see euro by euro since the bank was born, each and every credit and loan that has been granted by the bank, who it went to, the amount, the purpose of this loan. So this full transparency makes us, I was saying, unfortunately, a unique experience on the Italian banking system, and not only on the Italian banking system. We do have some other major differences with respect to the traditional banking system. One of the most important would be we do a double evaluation of any loan request that arrives to the bank. Let me explain. Each and every bank obviously has to do an economic evaluation of every loan request. If someone comes to the bank and say, hey, I need a loan for my activity, then the bank has to make an economic evaluation, a financial evaluation, looking at the balance sheet, looking at the availability to reimburse the loan in the future, the business plan, etc., and so on and so forth. Banca Etica obviously does this evaluation, but at the same time does a second evaluation, which is an impact evaluation. We have some assessors, some evaluators who make economic, social, and governance evaluation of each and every loan request that arrive at Banca Etica. A very interesting aspect is that the traditional economic evaluation, just as any other bank, is done obviously by the employees of the bank, so by the bank structure, but the social and impact evaluation is done by the shareholders, directly by the shareholders of the bank. We have some of the 46,000 shareholders of the bank who follow a specific course, a formation course, in order to become social and environmental evaluators, and then go directly to meet any organization, any firm, any company, any person that asks for a loan to Banca Etica. And the two evaluations, the economic and financial one and the social environmental evaluation, go somehow in parallel in order to better evaluate that anyone who asks a loan to Banca Etica does fulfill the ethical principles that are at the basis of the functioning of the bank itself. This principle states in the very statute of the bank. So since the bank was born, in the statute of the bank, we put that each and every activity that harms the environment, the human dignity, the basic human rights is completely forbidden from any activity of the banks. So this means complete exclusions of all the weapons and arms sector, a complete exclusion of fossil fuel, of coal and oil and all the fossil fuels, a complete exclusion of nuclear energy, and on the other hand, a specific impulse in order to promote some sectors, namely North-South cooperation, namely organic agriculture, renewable energies, and so on and so forth. So all of the loans of the bank are completely excluded from the sectors that would have a negative impact on human rights, on human development, on the environment, and do try to foster a different economic, social, and environmental model. Another specificity of Banca Etica, a few years ago, we started what we called an impact appetite framework. Let me explain what this is. Once again, all the banks have to produce, and the board has to approve yearly a risk appetite framework. This means every bank has to provide to the central bank its plans in terms of economic and financial risks. This means each and every bank has to say to the central bank, for the coming years, we want to disburse this much loans, we want to have this capital requirements, we want to have this rate of default, and all the economic and financial criteria of the bank have to be included in this risk appetite framework in order to present to the national banking authorities what are the objectives that the banks gives itself year after year, and in order to monitor if these objectives are fulfilled year after year. We do obviously have, as every other bank, the risk appetite framework, but Banca Etica started a few years ago on its own, and once again, it's the only case, I believe, on a European scale, an impact appetite framework. This means we, in parallel with all the economic and financial objectives that the banks want to reach, we do have some environmental objectives, some social objectives, some governance objectives, and we give ourselves these objectives. These objectives are this impact appetite framework, or IAF, is approved by the board each year. And so each year we can monitor if and how much the bank fulfilled its own goal in terms of environmental and social objectives. Let me show you just one slide with some of the criteria that are included. I hope you may see you have several fields. You have environment, rights, governance, peace and international justice, and ethical finance promotion. So we do have some specific criteria that we can monitor year after year. For instance, in the environmental field, you have how many loans go to contrast climate change, so energy efficiency, renewables, or so on and so forth, and how much loans go to organic agriculture, as well as what are the direct emissions produced by the banks. So we have some internal goals in terms of, for instance, do we fulfill gender equality inside the board? What are the maximum pay and the minimum pay of the bank in order to see if there's some social justice in the retribution inside the banks, and what are the direct emissions of the bank, as well as some indirect criteria, such as how much do we give money, loans, and credits to the organization and the associations involved in contrasting or climate change, or for social justice, or for North-South equality, and so on and so forth. So I hope you may read something in these indicators, but this is just to give you a flavor of the main differences that occur between Banca Etica and the other traditional banks. Now, Banca Etica just provides loans. So it raises money on bank accounts and provides loans to these sectors, but it's also ahead of banking groups owning, namely, an asset management company. So we have Banca Etica providing loans, and on the other hand, we have another company which is called Etica SGR. So it's an asset management company thus investing onto the financial markets. And once again, it may be of interest, telling you just a few words on how we try to do the selection of the bonds, shares, and government bonds that are admissible and that are included in the funds of Etica SGR. Just as a bank, first of all, we have a complete exclusion of some sectors. And once again, we have a complete exclusion of the weapons and armed sector. We have a complete exclusion of coal, of oil. We have a complete exclusion of chemical companies. We have a complete exclusion of nuclear, obviously nuclear weapon, but also civil nuclear application. So we have a complete exclusion of several sectors. For all the other sectors, we do an evaluation of each company that is present onto the financial markets. And namely, we do a double evaluation. First of all, any company has to reach a minimum level in terms of its environmental and its social and its government performance. So we have a minimum points that have to be reached by any company. Secondly, the company has to be among the best in class in its sector of activity. So, for instance, we can say all the companies working in housing, which are just the 20% or 25% best companies, we will only consider the best in class in that industrial sector or in that sector in general. Then, for the best in class, we also see if it has a minimum rating in terms of environmental performance, social performance, governance performance. The same analysis happens with government bonds, so with states. We look at the states and we look just the states that, for instance, completely excluded death penalty. The states that do spend in welfare, healthcare, just at minimum this amount, that does not spend in military spending, that signed the International Convention on Biodiversity, that have concrete plans against climate change. So after dozens of criteria, I'm trying to cutting it short, but really dozens of criteria, we have a deep analysis of the states and of the companies. And after this analysis is made, the companies that passes this different evaluation examined after by an independent ethical committee named by Banca Etica, but independent from the asset management company. So we have an ethical committee that examines this company and the states. Then the decision goes to the board of Etica SGR that decides if a company may be included or not. So in the end, you have some kind of universe of admissible companies and states, and the financial managers can only pick among the companies and the states that are included in this universe in order to create the funds that are managed by our asset management company. So once again, we have some transparent and quite deep analysis of all the companies and the states before they are allowed to be part of our investment funds. So once again, in order to close this first part, this first presentation of Banca Etica, I think there are a few key words, and maybe the most important one would be transparency. I think we badly need a complete transparency both on the criteria and on the results of the analysis in order to allow customers and clients to decide whether we are talking, to come back to the title of this lecture, to a truly sustainable finance. And I guess this is all the more important because lately, in the last years, we witnessed some kind of explosion of sustainability, namely among the banking and financial sector. I think we can hardly find a single major banking group that does not try to paint itself as fully sustainable. The problem is there's a lack of transparency, a lack of explaining the criteria that are used in order to define what one means by sustainability. Up until a few years ago, we did have some banks that portrayed themselves as sustainable because they used recycled papers in their branch offices. Maybe at the same time, they would finance with billions of dollars coal companies and the worst mining activities in the world, or the weapons industry, but you use recycled paper in your office, and that's your definition of sustainability. So in order to avoid some kind of marketing more than sustainability, or some kind of, I guess you know the word greenwashing, meaning I wash myself with a green paint and then I keep on doing business as usual. We really need full transparency, and we really need some shared and common criteria in order to define what can be called sustainable and what can't be called sustainable. So this brings me to the process that have been started a few years ago by the European institution, and namely the European Commission, that started some years ago a process in order to define what could be called sustainable finance and what couldn't. And as Banca Etica, and more broadly as the Association of Ethical and Alternative Banks, we do have an association on a European scale, which is called FEBEA. FEBEA would be in English the European Federation of Ethical and Alternative Banks, which is a federation that gathers some 35 banks and other financial institutions in 15 European countries, and that tries to promote, with also an advocacy work towards the European institution, to promote ethical and alternative finance on a European scale. Well, as Banca Etica and as FEBEA, we were really happy to see the starting of this process on sustainable finance. First and foremost, as I was saying, because we thought we would badly need some common and clear and transparent criteria in order to define what could be called sustainable finance and what could not be called sustainable finance. So the fact that the European Union, the European Commission, started this path in saying, okay, we will give criteria, and any asset management company, any financial investor that wants to label its product, its financial, its fund, its pension fund, investment fund, whatever would it be, with the term sustainable, has to fulfill the criteria we will put forward and approve. And I have to say, at the beginning, there was a really interesting, deep, and serious work that has been done with the creation of what has been called the taxonomy. The taxonomy would be, for any productive activity, a group of experts would go and see what were the impacts this activity would have on several sectors, on climate change, on biodiversity, on waste management, on water management. And for each, let's see, automotive, does it have a positive impact on one of these sectors? Does it significantly harm any of the other sectors? And we will include in the taxonomy of the sustainable activities only the productive activities that have at least a significant positive effect in one of these issues: climate change, biodiversity, forestry management, water management, etc., and do not significantly harm in all the other sectors. So in the end, you had this taxonomy of activities, and the European Commission said only the funds that do respect the taxonomy and invest in this activity may call themselves sustainable according to definition of sustainable finance. The problem is, well, the first problem somehow is that the definition of sustainability that was given by the European Commission, at least in this first phase, was really almost only about environment and climate. And let me clear, I mean, it's as important, as urgent to operate on climate, and we do need finance transformation in order to provide funds in order to contrast climate change, in order to operate, mitigation and adaptation to climate change. But at the same time, what we say as ethical finance, in order to be truly sustainable finance, we cannot just look at the environmental and climate part. sustainable finance has to deal with social issues, has to deal with government issues. I mean, it is just, I guess, too clear to see the situation in these days, what's happening in Europe in this day, and thinking about how much finance provides money for the arms and the weapons industry, and how many people in this day are starting to say, I don't want my money to end up fostering conflicts and wars and arms deal and weapons deal. So if my investment fund has to call itself sustainable, it can't invest into arms and finance, arms and weapons and fostering conflicts. So the idea of just defining sustainability as climate and environment could be understandable on a first phase, but it must be seen just as a first step of a very long journey. It can be understandable to start from the environment and climate for several reasons. First of all, there was some kind of political consensus after the Paris Agreement against climate change and all the appointment and all the documents that have been produced by the international institutions, and namely EPPC, if you saw just a report came out a couple of days ago. I mean, there's a huge political movement in order to act and act now against climate change. So European Commission said it would be easier to promote this, to start this journey on climate and the environment. Secondly, it is somehow easier to find quantitative criteria in order to measure the impact on the environment. It is somehow easier to say, okay, this industry has this amount of polluting emissions in terms of tons of CO2, and on the other hand, it produces this much of renewable energy in terms of kilowatt or other. So you can find yourself quantitative criteria in order to define the environmental impact. It is obviously much harder to find similar quantitative impact when it comes to human rights or when it comes to governance issues or other issues. But this said, you have to arrive to a full definition of sustainability that takes into account all the dimension of sustainability, and namely social and governance. The problem is, even on climate and the environment, the final result is quite disappointing from our point of view. As I was saying, the European Commission started with this taxonomy, with a group of experts defining the taxonomy in a very serious and deep way, and we were really happy with the result we had up until a few years ago. Then the discuss passed to the European Council and European Parliament, meaning all the single European governments were involved, and that's also where several lobbies tried to step in and try to lower the bar and enlarge the criteria. And so we had the latest proposals from the European Commission that basically said, with some condition and some strings attached, but we will recognize natural gas and nuclear as sustainable activities, and they may be included in the sustainable finance. There was a strong opposition from all the environmental organizations, from several European countries, from FEBEA. We try to voice our concerns in including natural gas and some fossil fuels and nuclear energies inside the sustainable finance approach. But nonetheless, the Commission forward the official document to the Council and the Parliament defining sustainable finance, and in this latest definition, gas and nuclear are there. So now we are in the phase where the European Council and the European Parliament have received this document from the Commission. They still have a few months in order to approve it or discharge it, but they cannot modify the approach from the Commission. So either they completely vote against this approach to sustainable finance, or they approve it as it is with gas and nuclear in it. So the risk we face is to have a really quite disappointing ending result on defining environmental sustainability according to the European Commission. And it's all the much worrying because this could somehow set a standard on not only a European but an international level. And so having somehow lowered the bar in order to define sustainability is something that really worries us from several points of view. maybe the most worrying thing is that the risk is to empty the meaning of sustainability. I mean, this lecture is called Truly Sustainable Finance. And so several organizations started wondering, but do we have a definition of sustainable development, of sustainability, that is used also by the institution in order to check what can be called sustainable and what can be called sustainable? In fact, the definition we had, maybe the most used definition of sustainable development and sustainability is the one provided more than 30 years ago in the Brundtland report. It was this report called Our Common Future. It was a report commissioned by an agency of United Nations back in 1987. And this report contains a famous and quite shared, quite widespread definition of sustainable development, which would be, in simple terms, ensuring the well-being of this generation without compromising the well-being of future generation. So after this definition, you obviously have all the ideas of circular economy. Well-being of this generation without compromising the well-being of future generation means do not use raw materials that are used by our generation would not be available for future generation. So after this definition, I mean, quite simply, can nuclear energy be considered sustainable, even without taking into account the risks of nuclear power plant, even without taking into account the management of nuclear waste, which is not solved by today. But if we use uranium in order to make nuclear power plant work today, will this same raw material available for future generation? The answer is no. Thus, we hardly can see how current gas exploitation and nuclear energy can be seen as sustainable after the same definition used by the European and international institution. This said, in order to try and conclude within a few minutes, as I was saying, we do have other problem with sustainability. Sustainability cannot be just environmental and climate sustainability, as I was saying before. We do have to take into account other issues, and namely some very specific issues of financial industries and financial markets. I was really astonished to see that in the first papers published by the European Commission in order to try and define sustainable finance, there was no reference whatsoever to speculation. There was no reference whatsoever to tax havens. There was no reference whatsoever to continuous crisis, to financial instability, to short-term objectives of the financial markets. I mean, I can tell it as a joke, but it's not a joke. After the following strictly the definitions that today the European Commission gives of sustainable finance, what happened less than 15 years ago with the subprime mortgage crisis, with the Lehman Brothers and the major financial crisis of the latest century could be defined as sustainable finance. If you only look at environmental and climate impact of your financial activities, then Lehman Brothers was a great example. Then subprime mortgages were a great example of financial sustainability, but because they had no direct impact on climate change. So we do have to take into account several other issues. Another one, I mean, I live in Italy, and in Italy we are witnessing somehow what you could call the money paradox. Let me explain. In somehow, you never had so much money flowing around, you never had so much liquidity onto the financial market as we witnessed up until a few months ago. I mean, at the end of 2021, Italian government bonds had a negative rate of return, which somehow means that you have so much money to the financial markets that customers and clients have to accept a negative rate of return in order to put their money, to invest their money somewhere, or on the other hand, has to accept enormous risks in investing in order to try and seek for some positive rate of return. So you have an incredible amount of money onto the financial markets, and at the same time, there's never been so much financial exclusion. You have people, you have small firms, you have artisans and companies which cannot have access to credit, cannot have access to financial services. So if finance should help the economy and put the money where it's really needed in the economic system, we currently have a gigantic failure of the financial markets. On the one hand, you have an excess of money that has never been witnessed in human history, maybe, or in the recent times at least. And on the other hand, you have a huge financial exclusion. If you read the latest report by the civil society organization that in Italy try to fight against mafia, they would tell you that usually it's at its peak. You have a lot of people that do not have access to credit, do not have access to banking services and financial services, and that end up in the hands of mafia because it's the only channel they have to have the money they badly need for their activities. So the fact of this money paradox, too much money and lack of money at the same time in the same place, how you can call this sustainable is just another aspect I would like to point out, but really to say that what we are trying to put forward in order to conclude this lecture, I hope I wasn't too long in this first intervention, is that truly sustainable finance relies on some keywords that we have to take into account. And these keywords are also included in a paper that has FEBEA, as the Federation, European Federation of Ethical and Alternative Banks, we published a few years ago, and it was a kind of open letter, open documents to the European Commission. And basically we were saying, we welcome the process to try and define sustainable finance, but in order to have a truly sustainable finance, we really need to see some key elements present into the European process. And these key elements, one, as I was saying before, as I said several times before, is transparency. We need full transparency in order to allow the customers and the clients to have their own opinion and to really know if the bank, the asset management they have in front of them is providing them truly sustainable financial products, or it's just marketing or greenwashing. We need a broad definition of sustainability. It's not just environment and climate. Environment and climate is fundamental, and it must be taken into account in the most serious way, but we have to take into account all the social issues, all the government issues, all the links between environment and social and these fields. We have to take into account all the specific issues of finance. I was saying some of them before: speculation, short-termism, tax havens, and so on and so forth. Another problem of the current European approach to sustainable finance is that it only looks to the specific product. So any banking group can put forward some sustainable fund, and then the bulk, the majority of the other funds, of the other products it put on the market are just traditional products. So if, as the European Commission itself says, if one of the main objectives of this sustainable finance is to shift financial flows from negative environmental impact and fossil fuels towards energy efficiency and renewables, we have to shift the financial flows to a different economic system. If you just look at the specific financial product, you won't have this shift, because what we witness already today is that the major banking groups are just putting forward 1, 2, 3 products which perfectly fulfill all the definition of sustainability, but the vast majority of the funds are still investing in fossil fuels, still investing in activities with harmful impacts on the environment. So you don't have any shift, you just have a few products, just as you get into a supermarket, and in one corner of the supermarket you have the fair trade products, or you have organic agriculture, but then 95% of the product sales by the supermarket is traditional stuff or junk food or whatsoever. You don't have a shift of the economy in that field. So we would really need to move from looking at the specific product to look also at the overall behavior of the company, the asset management, the bank who's offering this financial product. So as a last words, if I guess I want to conclude on an optimistic view for the future. One thing that struck me during all this debate on the European Union is maybe the strength, to see the strength with which the lobbies and the governments try to influence the process to define sustainable finance. the strengths with which some European government asked nuclear energy to be included in sustainable finance, or natural gas, or other sectors that were excluded from the first taxonomy, and the force of the lobby and the advocacy and the pressure that has been put forward in order to enlarge this criteria. Obviously, on the one hand, it's very negative because in the end we have lowered the bar, as I was saying before. But to see, to witness this strength and this pressure somehow makes me wonder of how important it is now for banks and for asset management companies to be able to portray themselves as sustainable. Because let's think, we are not saying that if sustainable finance, the criteria for sustainable finance exclude coal or exclude gas or exclude nuclear energy, then starting tomorrow, coal or nuclear energy will be banned from European Union and all the nuclear power plants will have to shut down. What we are saying is just that if an asset management wants to put forward a financial product stating this is sustainable finance, then in this financial products, in this investment fund, you don't have to have shares and bonds of companies involved with nuclear power plants. So you can still provide funds to coal plants, coal mining, nuclear power plants, all the activities you want. You just can't call them sustainable. So the strength put forward in order to say, we want to include these activities as well in sustainable finance, I think it's a major proof of the fact that sustainable finance now it's a major issue. There's been really a grassroots movement, maybe ethical and alternative banks, not just Banca Etica, but the movement of ethical and alternative banks have paved the way and have shown that a different use of money is possible for the financial sectors. And now more and more customers and clients and normal people and investment funds and religious funds and pension funds, more and more are asking their asset management company and their financial manager, I want sustainable products. I don't want my money to be invested against my own values, again, my ethical values, against my principle. Thus, I want you to invest this money only in a sustainable way. And the strength of this movement and how much this movement is growing, I think is the major reason behind the pressure that we have witnessed in the last week, in the last month, in order to try and weaken the criteria used by the European Commission in order to define sustainable finance. So obviously there's a negative way in seeing that is the urgency we face when we look at climate change and what is happening today. Is not, we're talking now the impacts of climate change in 20 years, the impacts of climate change today, and we have to face these impacts today. We need to badly and urgently act against climate change. So we need strict definition of sustainable finance. Would it be just on environmental and climate dimension, which, as I was saying, is not enough. But the strength to see how much people and how much from a bottom-up approach and a grassroots movement is moving youth, most and for all, really a hope for the future and the possibility in the coming future to really see a shift, all in all, into the financial markets towards, we hope, as we were saying in the title, truly sustainable finance. I would stop here for my first intervention, and obviously I would be more than happy to hear any comment or any question on these issues in the time we still have remaining. Thank you, and thank you once again to Professor Giannotti.
Thank you too for this passionate and super interesting talk. I'm kindly inviting students interested in asking a question to write the question on the chat so I can read and forward the question to Dr. Baranes, or comments and so on. So one head, one vote, transparency, social impact evaluation together with economic and financial evaluation, not only risk appetite framework, but also social impact framework, very interesting, and the taxonomy. I do agree with you talking about the keywords of the paper of the FEBA. FEBEA, and I will upload the paper in our platform so our students could study and could read the paper. Transparency, obviously, a broad definition of sustainability. This is my first question. I 100% agree with you that now environment, climate change is fashionable. All of us are interested in having a better world, a more, without pollution, without to preserve also our planet. But in my opinion, looking at also the taxonomy, the social leg of the sustainability, it seems to me that is really under-evaluated. In Italy, we have a lot of small and medium enterprises, family enterprises, small, medium enterprises. And the social role of these kind of firms is crucial. So my question is how finance could help, and the bank could help a small and medium enterprises and the family enterprises to preserve this richness, to preserve the role of the city of the where they live. Let give me you an example. The generational change between the entrepreneur, the founder, and the son and the future generations. It has a social value from my point of view. It has a social value because there are suppliers, there are clients, there are employees, they are living in that city, in that area. So how can a bank and how can finance help a small and medium enterprise to preserve, to protect this social value? This is my first question. Thanks a lot.
Yes, thank you. This is fundamental in my opinion too. I perfectly agree. When you were saying the social leg currently is under-evaluated. Basically, the first approach from the European Commission was to say, let's look at the international treaties and international organization, which is great, obviously. But if we limit ourselves to the basic international agreements promoted, let's say, by International Labour Organization, yes, obviously, social sustainability encompasses also prohibiting slavery. But I hope we can move a little forward than just looking at the international treaties on workers' rights or human rights. Obviously, they have to be there, but we have to move forward from there. And as you were saying, we have a huge problem with small families companies in this moment, namely the fact that a lot of them face financial exclusion or problems for access to credit. And this is something I would say that in the last year, we witnessed all these mergers and acquisition in the banking sector. We have progressively less and less banks of bigger and bigger dimension, and we risk to lose the territory banks that had a direct link with a small company on the territory. Once again, in Italy, we witness that there are growing numbers of small towns that do not have a single banking branch anymore because they closed because the mergers and acquisition. And yes, in Milano and Roma, you have thousands of banks. But if you go in the province, in the small towns, and namely where the small companies are placed, you do not have a single bank account. And there's this more and more distance between the banking and financial sectors and the need on the territory of families, of people on the ground, that is really worrying. And we have to take into account, I guess, this part of in defining social taxonomy and trying to say what's the level of financial exclusion and how can we reverse this financial exclusion that we witnessed in the last year. So sometimes as ethical finance, we say what we need is somehow banking biodiversity. And banking biodiversity means you have the big transnational corporation, which is obviously best served by the big banking group. But you also have the small family company in the small town, and the big international banking group cannot properly serve the small family company in the small town. You need small local banks, like you had in Italy, the strong tradition of cooperative banks, of popular banks, of small banks directly linked to a territory, knowing the story, the reality of the region, of the town, and which were best placed in order to serve and to fulfill the need. Basically, what you were saying, the employees and the work and the family and the group and the community itself. The bank was part of the community. So this banking biodiversity would mean you have different productive activities. You need different banking models. You don't have the perfect banking models. It's not a big banking group, and it's not, but you need to have both. And seeing, European legislation going a bit too much in the direction of what we call one size fits all. I mean, the rules are designed onto the groups of biggest banking groups, are designed, tailored onto the biggest banking groups, and we tend to forget the needs of the small companies and the need for having small banks with specific characteristics in order to be able to reply with the financial exclusion we witnessed in the last years, not only in Italy, but in several European countries, I guess.
Thanks a lot. So we have a question from the students. Very interesting thoughts. What about third sector applications in sustainability finance? Maybe you are interested in understanding which are the possibilities for the third sector within the sustainable finance. Please.
There are a lot of
there is a second part of the question.
There is
a shift towards sustainability in finance as well, very visible. Listening to your speech is like to change is mostly greenwashing here. Normal firms to capture a new market. Is it so? Wow.
Big question. So first one, for the third sector, no-profit sector, I would say as Banca Etica, we were born only giving credit to third sector and no-profit organization because this was our history. As I was saying, we were born out of the work of years of fair trade organization, associations, NGOs, etc. So in the first years, in fact, we did works only towards the non-profit and the third sector. Then in the latest years, we saw there were some specific sectors like organic agriculture or renewables, namely, or several others that were perfectly in line with our missions and values, but could be profit companies. So we enlarged our scope. Once again, third sector, I guess, has a very important role to play. And on the other hand, also coming back to the question that Professor Giannotti was posing, is witnessing an exclusion and several difficulties for access to credit. Maybe a little merit that can be given to Banca Etica is that showing that after 20 years we work with results that are better than the average of the banking system, show that third sector and non-profit sector is bankable somehow. It was considered, apart from the biggest NGOs or the biggest organization, it tended to be seen as non-bankable by the traditional banking system. Now in Italy, you have several banks that said, hey, Banca Etica is working, has been working for 20 years, it works very well. So it means that the third sector and the non-profit sector is bankable and just, reimburse the loans as much or even better than the profit sector. So there's some room for improvement, but I think the situation is rapidly improving to this regard. For the other question, is very hard to reply. I think there's a mix of both. There is a serious shift towards sustainability, and we see that more and more people, even in the top management, are more and more committed to sustainability and are truly trying to change things. On the other hand, there's a lot of greenwashing and marketing. To put it a little sharply, but as long as the one and only goal of the companies is to maximize the share onto the financial markets on the shortest possible terms, because the shareholders only look at the profits I can make in the coming month, in the coming weeks, and the pension funds and investment funds only look at short-term profits, and we have this short-termism, then the great chunk of sustainability, maybe marketing of greenwashing, is just another mean in order to maximize my sharing profit. If the funds and the customers and the pension funds and the religious funds are starting to say, hey, we want a real shift in the behavior of the companies, then you will witness this real shift. And what I was saying, I'm a bit optimistic, not too much optimistic, but a bit optimistic, because I see really a bottom-up movement of people, of religious fund after the encyclical of Pope Francesco, and there's been a huge movement and in the religious funds. There's more and more pension funds that are moving. And I mean, all in all, the major actor onto the financial markets are pension funds, investment funds, insurances, banks. Yes, you have the Gordon Gecko, as in Wall Street, you have the Wall Street shark, but all in all, the hedge funds in the Cayman Island, a small amount, I mean, the vast majority of the money which is moved onto the financial market is given by pension funds, investment funds, insurance, and banks, which are all actors that in the end depend on the money of million and customers. So taken one by one, obviously I have 2,000 euros on my bank account, this won't change nothing. But if there's this huge bottom-up approach, this huge grassroots movement of people saying, I want my money to be invested in a sustainable way, and I want to check. So I want transparency in order to be able to check if and to what extent this fund is sustainable, then the pension fund, then the investment fund, the asset management will really change, and then we will witness a real change also in the industry and the companies and the overall behavior.
Okay, thanks a lot. So another point that you underlined in the keywords of Febrea paper was the importance of being concentrated not only on the products, but be concentrated on the issuer, so the model of the banks or the company. It's very important, but I have another questions about, in this day, unfortunately, we have another experience of war. And my question is, how important is finance and banking activity, not only after the outbreak of a war, but also to prevent the outbreak of a war? So financing the good companies, financing a way of thinking, a cultural behavior. How can a sustainable finance can be a good instrument, an effective instrument to change the world?
Yeah, I think it's fundamental, and once again, we need a shift in people thinking. If my only goal is to maximize profits, or at what extent? I guess if someone would come us across the road and say, "Give me 100 euros," I will invest them in some landmines, in a conflict in Africa, dictator, and I will give you 200 euros in a week from now. I guess almost nobody in the world would lend the money to a business like that. I mean, we'll be horrified by a business like that. Why the moment in which I put my money in the bank, or I give it to an asset management, or I put it in an investment fund, is just that it wasn't my money anymore. I mean, as I was saying before, yes, my money is less than a drop in the ocean compared to what is happening onto the financial markets. But all the single drops of clients and customers can really make a shift, and they can really make a shift also in terms of the weapons industry, the arms industry. I mean, there's a lot to do. There's a lot we could do. Not only the situation we're witnessing now, but a lot of how they call the low-intensity conflicts that are taking place all over the world, and where arms deal and weapons deal are fundamental, and finance is fundamental, because we're not saying a short deal where it's easily organized. When you're talking about the weapons industry and the arms industry and tanks and fleets and airplanes, you're talking about billions and billions of dollars. And so you're talking about really complex financial agreements where huge banks taking place, pools of different banks coming together. So the financial part is fundamental. And if we really try to shift, as I was saying before, it's a market. You have demand and offer. So if all of us start saying, I don't want my money to go there, and I'll shift away my money, then the banks will behave differently. And I guess we can make a difference both in concrete terms and in the way of thinking of people and how people think. This is once again a reason why when we speak about sustainable finance, we want to see 360 degrees sustainable finance. We cannot talk about sustainability just about climate and then letting arms and weapons be part of sustainable funds. I mean, it's obvious an absurdity.
Yeah, and I do believe that also, giving money, lending in activities, activities that can help to preserve, to respect human rights, it can be helpful for the new generations to grow up in a different way. So it can be the basic of a cultural change for helping people to understand that is human rights, the respect of human rights, the respect of employees, the respect of can be helpful to preserve and to prevent these awful situation that we are facing this time. Another question, because my students of FinTech are attending this lesson as well. And so my question is how technology can help this in financial inclusion, this sustainable finance world, this goal of sustainability, the role of technology, artificial intelligence technology in this changing world. Thank you.
Well, I think first of all, it's a trend we are witnessing, and also what I was saying, there are some negative impacts, which is the closing of banking branches in Italy, and we witness a lot of small towns that do not have a banking branch. On the one hand, more and more people are going through digitalization, etc., but we also know that Italy is quite an elderly country, and we have a lot of people that currently face some difficulties. What we see is that technology is helping us a lot. Also in Banca Etica, we just have a few banking branches, and we also work a lot with internet banking and all the new technologies and apps, etc. It's also fundamental for us, also in order to keep lower costs as possible, and just to be able to finance credit also at lower rates of interest. So mainly in terms of possible use of credit towards the other people. We are watching with a lot of interest what's coming up of new technology and all the debate on cryptocurrencies and NFT and all what's happening. For the time being, I would say that the major cryptocurrencies, starting from Bitcoins, are not really compatible with the ideas of ethical finance. I mean, Bitcoin has a huge environmental impact. We all know that. I mean, the proof of work means that there's a lot of computers that work 24/7 just in order to mine Bitcoins and produce Bitcoins. The blockchain technology is really interesting. It could foster transparency and the complete knowledge of all the chain. So, but we also know that now it can be used to guarantee complete anonymate, and so it also used by all kind of illegal deals and trafficking all over the world. So I'd say potentially is really interesting what's happening with crypto. Really fast happening with crypto. And so if I do recall well, the original article from the mythological Satoshi Nakamoto was something around 2007 or 2008. So we're talking less than 15 years, all the history of cryptocurrencies. Now everybody's talking, everybody is investing in cryptocurrency. So really saying in 5 years or 10 years from now, what will be the use of crypto or NFT or other technological devices, I guess is really hard to make some assumption. But I guess some of these issues are a lot in line with ethical finance, but the examples we do have now are still not. So we are looking with a real interest to what's happening in technology and crypto and all these words, but for the time being, I would say they are not really compatible with our values in terms of transparency and in terms of environmental impact.
Okay, so good, thank you. I don't know if anybody is interested in other questions or comments. Good. So thanks a lot, Dr. Baranes. Thanks a lot, Andrea, for this interesting speech. I think that you provide us a lot of insights and suggestions to reach a truly sustainable finance, a truly sustainable world. And I hope that we could have the chance another time to have you with us for another lecture. And thanks a lot for sharing your time with us, with our students. And I think that you provide us a lot of suggestions, think to deepen. Okay.
Thank you once again for the invitation. It's been a pleasure. Thanks a lot.
Okay. Thank you, Andrea. Arrivederci.
Bye-bye.